Okay, welcome back to another Calgary Real Estate Market Update with us here at Redline Real Estate Group, here on Redline TV. Today, I'm going to be discussing the sales numbers that came back from June 2020. In this video, I'm going to bring you through my personal analysis, as well as the major economic numbers that came back from our real estate board. The three major categories that I always like to spend some time on are the sales summary, the inventory story, and of course, our pricing picture. Now, after finishing that up, I'll be also going through my three sections of advice for buyers, sellers, and investors alike. Let's get after it, should we? All right, let's dive into the sales summary. What I'm seeing is the rebound that we've achieved in our Calgary real estate market since the depths of the pandemic to now is surely incredible. Now, in the last 2 months, I've been speaking about the recovery, about the rebound, and we've been clawing our way back to normal levels. And now, as of June, I'm proud to say we've achieved that. We are there. When we look at June as a whole, we are only 1.5% below last year's June sales figures. It's an incredible feat. We've come from such a far place to a really good position right now. Now, if you remember last month's update, when we finished May's numbers were still 44% behind the prior years. So we've gone from there to basically break even now in the month of June. So all things considered, that is as big as a wake up as we could ever expect. Okay, let me break down the different market segments for you so you can see the numbers as they adjust to those different segments. The detached market fared very well, negative 0.4%. That's basically a dead heat. The attached segment, minus 2.64. So not quite there, but again, I would suggest very much equal. Now, the apartment segment, it's the one that's struggled the most since 2014 to now, and it continues its struggle and is the worst of the four market segments. Its June numbers were minus 13% compared to last year. And then when I look at the surrounding centers, this is an interesting trend. They are up by almost 12% over last year's numbers. Could that be because there's a trend to the lesser dense populations right now and the value that's created around our city? I think so. Our realtors are commenting to the number of Calgarians looking outside of the city of Calgary borders. So all those numbers, Calgary Real Estate Board says, minus 1.58%. That's it. I wanted to showcase you this on our graph. On this graph here showing on the screen, I've reported May's numbers and June numbers combined to show you over the last 2 months how much things have changed, where we've come from in terms of our rebound. So take a look at this graph and you'll see where we were and now where we are. And this is this year's numbers in comparison to last year's numbers on a full week by week basis. So lots of data here, but the trend is what I want to show you. Starting low, ending way up here and on pace. So the question I get asked often is this going to continue? Well, I would suggest right now, based on all the numbers I'm seeing, the answer is yes. For now, I foresee, and it's looking like there's enough pent-up demand to carry us for months like this for at least July, maybe into August, and then it's a little bit harder to predict. Because of the pandemic, our spring season was delayed. The question was, would it come back at all? And the numbers are showing absolutely it is. And I do foresee it having a full cycle, basically a June, a July, and an August that would typically look like an April, May, and June. Okay, to help legitimize this, I always like to show you some graphs as well, and these are from my analysis that I can report on. The other factors that always come into sales are those leading indicators I keep talking about. Number of deals under contract, and number of showings happening. Now, last month, I reported on that our showing activity had come within about 15% of last year's numbers at the same time. So that had come a long ways. Where do we sit now? As we review the end of June numbers, that place, that very optimistic place at the end of May, we have surpassed that and have completely charged through to another level. By the end of June, we ended up with our showings 25% higher than this same time last year. Incredible rebound with some momentum for the foreseeable future. I think, as a proud Albertan, that this speaks to the optimism and the perseverance of our culture here in the Alberta region. Here again is a graph that points this and shows that differential now where we sit. And you can see the graph started low and then eclipsed and is now quite a bit higher. Really nice to see. Okay, secondly, we need to speak about the pending deals. How many deals are actually under contract? Now, as of the end of May, we had made up a lot of ground when it comes to that. We started at the beginning of May 45% off of last year's numbers. And by the end of May, we were only 7%, and I was getting pretty giddy. So as we entered June, I wanted to put up this graph here so you can see the continued trend forward. It went up and it went down and went up and it down. And there was times in June that we held a 20% increase in our pending deals over the same time last year. And then it would dip down a little bit and bump back up and over. But by the end of it, as you can see on the graph, we ended with conditional deals 4% ahead of last year's pace. Again, another incredible feat showing the strength and the rebound of our market. Remember, these deals that are written, that are under contract, they're not yet reported sales. So when we continue to see that those numbers are ahead of last year's numbers, it is foreshadowing better reported sales numbers. So it's fair to say, with the showing tracker showing ahead, the pending deals showing ahead, that we will be experiencing another busy month of real estate throughout the month of June. Last month, I ended my video saying, if we can be within 10 to 15% of last year's sales numbers, we'll be doing okay. But as you've already heard, we're way above that. So I'm feeling very confident for the next little bit in terms of our sales summary. Okay, now let's discuss the inventory story. At the end of May's update, I discussed a recent trend that was happening at the back half of the month. And what that was a new trend of a lot of inventory coming to market, waking up from the slowness that happened during the middle of the pandemic. It looked like the COVID pause was completely over. It looked like sellers were waking back up and flooding the market with new properties. Now, what we didn't know is, would this trend continue? And I'm here to tell you is that through most of the month, we did see an increased number of inventory hit the market in relation to the same time last year. What it resulted in was, by the end of the month, we listed 6% more homes throughout the entire month than we had done at the same time last year in 2019. So it turned out to be a bump, but not a significant one. As you can see by the graph that I'm reporting here, you can see that that trend continued definitely through the first half of the month, and then it started to soften down to a more modest and appropriate range. In terms of overall active inventory, we ended the month of May with 22% less than we'd had the prior year, and in June with 17%. So you can see we've caught back up a little bit, but we're certainly in a position with much less supply than the same time last year. I've been tracking the gap, and I call this the gap, the total number of homes on the market versus the same time last year, ever since the state of emergency was declared. Because of this new amount of inventory, that gap has now closed to its smallest point since I've been tracking it at the beginning, middle part of March. But again, that number is still significant in comparison to last year's high inventory count. We're still in a pretty good inventory situation. In total numbers, that means we still have 1,300 less homes on the market as we finish the month of June. Now, I'm going to be watching this very closely because the inventory story is a major dynamic in the overall health of our real estate market. The question is, have we peaked? Is this big rush of inventory over, and are we now starting to settle into a modest pace? It's basically, is that spring ramp up over, or are we now into that mid-summer's pace as it is right now? Now, of course, not all markets are acting the same. Let me go through those differences right now for you. The major part of our market, the detached, it saw a 5.73% bump over last year. The biggest jump that we've seen came from the attached market. The amount of new listings to hit the market versus last year was actually 13.9% more. The apartment market, it's basically break even, 0.9% more than last year, which is a good thing because we did talk about in the sales summary that they are seeing the slowest ramp back up of sales. And then the surrounding markets, they saw a 6.3% growth over last year in terms of new inventory. Now the inventory versus sales situation is different for every one of those market segments. Those differences create different dynamics happening as a whole, even though we're in the same metro areas. So be careful. Ensure you have the right advice for the type of property you're buying. Even within the same market, the inventory and sales relationship per market segment is so different. So we will see, and we are seeing, that prices are being affected in every different market segment a different way. So let's flip over now and speak about our pricing picture. This is why I like to leave the pricing picture to last, so you can understand the inventory and the sales summary as it relates to your chosen market segment. The big concern that continues to surface is, will prices come down? Is the pandemic and the economy, is it in a situation where we're going to experience big price declines? I can't give you the long-term prediction, but I can tell you about what's happening right now. When we're reporting sales 20% better than last year, and then we're reporting inventory 17% less than last year, the situation paints a very strong picture that for the foreseeable future will be in a position to push off most price declines. This isn't to say we're not going to experience some small price adjustments because of the overall pessimism and the financial insecurity that's happening personally and then of course corporately across our province. But for now, with those two dynamics, pricing will remain close to a hold position. Okay, let me discuss the details for all of the market segments for you. As a whole, year over year, our market's seen a minus 2.79% decline from the same point last year. The detached market, it's minus 1.98. The attached market, minus 3.83%. And the apartment taking a little bit of a rear seat, minus 3.92. Now, I wanted to look at one more thing, and that's what have we dropped from January to this point, midway through the year. That number is minus 1.6. So as we came out of the Christmas season, jumped into Q1, and then the pandemic hit. From that point in the depths of winter through the pandemic till this point today, we are seeing that the pricing has overall only adjusted by minus 1.6%. The other question I get is, what are we doing month over month? Well, those numbers are always small adjustments because it takes the full calendar year to really make a shift in our pricing picture. Apartments, the market that I talked about having the most difficult time with sales right now, it adjusted month over month by minus 0.7%. Semi-detached properties, minus 0.45%. And then when I look at attached and then detached, it's just a basic dead heat, no change. So it's fair to say there remains continued downward pressure on our market. It's inevitable because of all we've been through. And right now, the increased number of sales, the lower inventory is providing us a bit of comfort that for now, things will remain pretty flat. But as I've been showing you, things are changing fast. Many of the graphs that I've shown you already saw that throughout a month, there's been incredible differences. So don't be surprised if this conversation with me changes month by month when it comes to our pricing, especially as we trend past the spring summer that we're having now into the slower fall and winter months. Okay, that's the three major topics: the sales summary, the inventory story, and then our pricing picture. Now I'm going to dive into the advice sections for buyers, investors, and sellers. Okay, now I'm going to be discussing my advice for buyers out there. My advice is actually fairly similar to what I gave out last month in May. If you're entering the market right now, it's going to feel a little busier than I think you expected coming into the real estate market right after all we've been through. As I discussed in the earlier segment, June's numbers basically matched last year's figures. But the month of June was interesting for sales. The first half, we were lagging last year's pace, and the second half, we were much ahead, 20 to 25% ahead of the sales pace that was happening at the same time in 2019. As we roll into the month of July, the pace is actually much stronger, much faster than the macro numbers I reported, with June being basically a dead heat. Right now, as I record this and as you listen, the pace of sales is ahead of last year's numbers. If you're in the apartment market segment, that's the area that's lagging the most. You probably won't feel the pressure of the other parts of our market. So what does this mean when you're out there searching? Well, if it feels, or your realtor suggests, that a property is priced very fair, the reality is it probably won't take very long before it sells. Okay, but if that home is not the right fit for you, don't feel the pressure. As I reported in the inventory story, inventory continues to rise, and that will happen through July and August. So again, don't pay more for a home that isn't the perfect fit for you. There's lots out there and lots coming. Okay, with that, happy buying. Have fun out there. But all that said, happy searching. Make sure though that you're aware that you're working with somebody who can give you the specific dynamics for the market segment that you're actually looking in. All right, let's flip over to my advice for sellers. Okay, for sellers, this remains a very exciting time for you. I know we didn't expect it, but where we're positioned as a seller, this is the fastest I've seen the market and the most optimism and strength of demand that we've had in a very long time. If you need to move, or you really want to move, now is a very, very exciting time. So if you didn't watch the full update, sales, they've rebounded considerably from where we've come from. And inventory remains a long ways off from last year's numbers. Those things combined provide a perfect scenario for you to get out there, list your home, list it fair, and I almost guarantee you'll be able to find a way to get to that next move and transition your life. So right now, list with confidence, price fairly, but have the confidence that you'll be able to complete this life transition that I know you're eager to make. Based on the daily review that I continue to dig into, I do believe that the month of July and likely the month of August will continue with this level of confidence. Now, at the end of last month, I did mention I was a little bit worried about the ramp up of inventory. That certainly continued into the month of June. But because sales adjusted, it was able to absorb that and not put us into a position where we need to be concerned about it yet. But this optimism won't last forever. I did mention the gap, the total inventory gap that we have between this and last year's numbers is as close to the numbers we had pre-pandemic. So what that means, there will likely be continued inventory that surfaces July, August, and into the September, October months. So this little window, I don't believe will last too long. You've got some time right now, but then I do believe the tables will turn a little bit as we roll into Q4. So it's basically this: if 2020 is the year for you to sell, get after it. Don't wait, take advantage now. Take advantage now because we don't know if there's going to be a second wave. We don't know what the second wave of the pandemic would actually do to our economy. We don't know what the governments will do if a second wave comes, what it will do. Will it shut us back down? But what we do know is right here, right now, it's really well set up to allow people to make the necessary life transitions that they're trying to do based on whatever scenario is yours. Well, again, every market segment, every price range is acting differently. When you're looking to make these decisions for your home selling needs, ensure somebody's giving you information based on your specific requirements and not just looking at the entire market as a whole. Okay, my advice for investors. As an agency that does cater to a lot of investment-minded realtors, we are answering many questions about what's going on and what should I be doing for my investment strategy. There's so many changes. How can I make a sound investment decision right now? And honestly, that's a very good question. The big one: will market predictions reign true? Will we see this big price drop? Are we looking into something very negative going forward? Well, as a sophisticated investor, you likely know this. You are not supposed to be purchasing with the intent for major appreciation. Now, if appreciation comes, that's fantastic. That's kind of like the cherry on the top. But for astute investors, they make buying decision based on the fundamentals and the economic situation happening presently, not a future gamble. One thing we know is earlier in the week, ATB released an article through one of their publications called The Owl, discussing Alberta's population growth. Yes, Alberta is still growing despite everything that comes our way and has come our way. For 7 straight quarters now, we've seen a positive net migration to our province. That's incredible news. And I'm glad they released this, because when we're in the day in, day out, and the stresses of our oil and gas economy and the negative news around Alberta's overall position in this world, you may not realize the good things that are happening. Population growth is tried and true economics. As a population grows, the economy grows. Things are needed to service all of the people moving to our great province. When that happens, we see economic growth. Secondly, our Premier, Jason Kenney, released the Alberta Recovery and Relaunch Plan this week. This is a bold, detailed, short and long-term plan to lift our economy back, to give us back that Alberta advantage that we once had. Well, much will be shown as to the items within the plan and their overall effectiveness. We don't know exactly what that will make. But what I do know is it's created optimism to the heart of Albertans to push through, to be resilient, and to drive our economy back to where it was. So as an investor like myself, these big items give me confidence to make sound, short-term decisions for my long-term real estate investing in this province. So keep your mind sharp and your eyes keen, because there are deals out there. Run those cash flow scenarios. There's lots of opportunities to grab. And if you ever needed a portfolio or even an independent property review, please reach out to us. We've got a team of dozens of investor agents able to support you with your professional investment decisions that you're looking to make. Well, that's about it for our real estate market update for the data we've received from our real estate board and my personal tracking through June 2020. I hope it provides you a different perspective from what you're seeing in the news, hearing at the water cooler, and as well just receiving from our real estate board general updates. If you don't want to miss any of these, please subscribe to our channel, hit that notification bell, and of course, I read every comment you provide, so please ask us questions. I'd love to provide you the answers. Until next time, have a great month. Enjoy July.